Welcome and thank you for joining us for today's webinar entitled 2018 Top 10 Asia Pacific Fintech Trends, brought to you by Capron Asia. My name is Thomas Bennett and I'll be acting as the webinar moderator. What lies ahead for financial technology in China and Asia in 2018? Will cryptocurrencies, ICOs, and blockchain continue to dominate the headlines? Will Singapore cement its role as the leader in Asian ICOs? On the banking front, will the Chinese government continue its stern response to rising popularity of small loans and individual investments? What response will be evoked from China's big banks and as their profitability is diminished by the growing popularity of internet banks? Across fintech and e-commerce generally, we are seeing a changing landscape due to both regulatory pushes and consumer demands. How will current developments in big data affect current business models and how consumers make purchases in 2018? What will the introduction of China's Wanglian mean for transaction fees and the development of the Chinese payment industry, including platform giants Alibaba and WeChat? In this informative 45-minute webinar, we'll talk about all these topics and present the findings of our upcoming Top 10 report, detailing the trends in Asia-Pacific fintech. I do need to inform you that today's session is being recorded and is run listen-only mode. However, we really want to encourage feedback and questions from you throughout the webinar. And since we always get lots of questions, we're going to get through the presentation in 30 minutes and spend 10 to 15 minutes in our question and answer session. To facilitate the discussion, we will use two features of the webinar software. The first is the viewer window, where you'll see the presentation and which I recommend maximizing now so you can see it in full screen. The second is the control panel, where you can interact with us. The control panel can be opened and closed by clicking on the arrow button on the Grab tab. In the control panel, you are welcome to submit questions and comments to our presenters. We will be answering as many of these as possible throughout the presentation and at the conclusion of the webinar too. Our presenter today is Mr. Zenon Capron, Managing Director of Capron Asia. Zenon is joining us from Capron Asia's head office in Shanghai. As one of Asia's leading providers in independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, Capron Asia helps clients understand and navigate the challenges they face in a challenging region with a rapidly changing business, operational, and technological environment. With all of our housekeeping out of the way, let's get started. To get the discussion started, let's hear from Zenon.
Thank you, Thomas, and welcome everybody to this year's edition of our Top 10 Financial Technology Trends. I think this is about the fifth year that we've had this, and 2017, it goes without hyperbole, that was one of the most interesting years for fintech in general, and I think especially in Asia. So hopefully we'll bring you some of the key trends that we see continuing into 2018 and being part of the story as we move forward into the rest of this year. So to get right into it, let's go into kind of the first area that we saw, and that was around payments. And really the story of real-time payments has been around for a couple of years now, but in Asia really started to grab hold. So obviously with China, Japan, Singapore already being on real-time payment systems, some of the region was already on real-time payments or faster payments, but there's a couple of different trends across different segments of the market that we're expecting over 2018 that will really define cross-border payments in Asia. The first one is real-time payments. So we have Hong Kong, Australia, Malaysia that are all, hopefully within the course of this year, moving on to real-time payment systems. Australia was delayed a little bit because of discussions with the banks, but Hong Kong and Malaysia have been ticking along, Malaysia having signed with ACI towards the end of last year. So we'll continue to see real-time payments be a critical element of what's happening in financial markets in Asia next year. SWIFT's Global Payments Initiative, GPI, Global Payments Innovation Initiative, was first announced in 2015, and now we're seeing many more banks get onto that platform. So, if we think about real-time payments from the domestic perspective, SWIFT and GPI will really change what's happening from a cross-border perspective in Asia as well. The other element will be third-party companies. So we're expecting to see more remittance companies come into the market and have a bigger play. We have companies like Western Union and MoneyGram, obviously, that have been around for many years, as well as upstarts like TransferWise. And so TransferWise is launching their borderless account service in the first quarter of 2018. And it allows customers to send money overseas with a real-time exchange rate. TransferWise is also opening up a regional headquarters in Singapore and exploring direct WeChat transfers, being able to remit money to China directly to WeChat. So those are kind of the third-party development side of things. Sub-regionally, we'll also see a lot of cooperation between various countries. We saw late last year the launch of real-time cross-border payments between Singapore and Thailand, with both of those platforms being on real-time payments. So now they have real-time cross-border payments. So we'll see more developments around that. That will probably be limited to Southeast Asia, just because of the nature of the financial industry cooperation down there. So we are unlikely to see kind of cross-border collaboration between Japan, Korea, China, more than we have seen already, which is just kind of the standard integrations into SWIFT or the China interbank payment system. And finally, Ripple has really taken the world by storm, not just the XRP Ripple token, but actually the partnerships and the uptake of some of their products, or at least the testing of some of their products. So Ripple has completed a trial of real-time cross-border payments in Japan and is doing some work in Korea and Thailand, and are definitely visiting China. How far they're getting along into the market here is to be seen. But certainly cryptocurrencies and blockchain will be part of the cross-border payment story in Asia in 2018. Another trend that we're seeing is Asia is finally getting their appetite for credit. So we saw a tremendous uptake in credit in China over the past couple of years, and that really dwarfs what's happening in many of the other markets. But certainly across Asia, I think the average Asian consumer is getting used to the idea of having credit. Chinese consumers seem to love credit. And this is being facilitated not just with traditional channels like mortgages and loans, but also online consumer finance. It's getting increasingly popular at checkouts, either at physical locations or online locations, for individuals to be able to access credit through lending at those locations. So that's becoming increasingly popular, and these Chinese consumers are really taking the bull by the horn, so to speak, and that's really driving a lot of the loan origination here in China that makes China kind of the leader in consumer loans. Now, that has led to many companies heading for IPOs, either having IPOs or IPOing later this year. So some of the notable ones for 2018 that we may see, Lufax has already committed that they'll be IPOing. That'll probably be one of the biggest IPOs in the world. Dianrong and 9F Bank as well are two other companies that are looking at IPOs. So one of the results of this incredible uptake in consumer finance in China is the fact that these companies are now actually listing overseas as well. Another trend that we're seeing is around big data. The big data market, if you've been in the financial industry for a number of years, you've known that big data was really a buzzword a few years ago. A decade ago, big data was around, but nobody was really using it or leveraging it. But with the massive amounts of data that are being created now from all of the online channels and digital channels that we have today, both mobile and online, there's an incredible amount of data that's being generated, not just within the financial industry, but in general. And so, 2 years ago, a survey indicated that 17% of companies reported using big data. And in 2017, that number is up to 53% for worldwide on average. And Asia is slightly behind North America and EMEA in terms of its use of big data, but I think we'll see that pick up rapidly in the future. And that's expected to grow to be a huge market, especially here in China alone, by 2020, representing just over $150 billion worth of revenue in the big data market. And a lot of this makes sense when you think about the digital players that are here in China, the mobile platforms, the amount of data that they collect on a daily basis from individuals about the food that they're ordering online, the goods that they're buying through e-commerce, the taxi rides that they're taking, even the shared bikes provide an incredible amount of data on the consumers here in China. And so all of that information is being leveraged to provide new value propositions for individuals in China. And we're seeing specifically in China a number of startups and companies that are really focused on this area, especially in the financial industry. So you have kind of the generic players within customer management, Fintech, Megvii, a few other players in there, as well as marketing and risk control, but then also some that are much more specific within the financial industry as well. So we're really seeing across big data and multiple different segments of the market this uptake and increasing prevalence of startup companies that are providing products and services to corporates in China. Now, one aspect of this is quite interesting is the artificial intelligence side as well. That artificial intelligence, along with big data and blockchain, were part of the government's 5-year plan. And artificial intelligence has applications both within the private sector and the public sector. So the government is heavily relying on artificial intelligence for a lot of its continued surveillance of the market in capital markets, as well as just in general of society in general. So artificial intelligence will certainly be an area that has potential growth areas going forward. Now, in the mobile payment space, one of the more important developments has been the launch of Wanglian. And we'll get into what Wanglian is in just a second, but it's useful to kind of review where we came from and where we're going on this. If you think about Alipay, WeChat Pay, JD Pay, many of the third-party payment providers created their own payment rails in China, effectively meaning that Alipay went around to all of the banks and opened up bank accounts at all of the banks. And then when you made a payment from, say, your Bank of China account to a friend's ICBC account, Alipay would just go into your Bank of China account, debit the money, and then credit in across their own network and credit the ICBC account. And so at the end of the day, or in real time, they would then settle and clear all of the payments. Now, if we compare that to the card network here in China, all of those transactions would go across China UnionPay. So all of the credit card or debit card transactions would go across China UnionPay and be filtered through that one area. So with online payments and mobile payments, previously, the companies would clear their own and settle their own payments. But the government has launched Wanglian. And so essentially what Wanglian could be considered is a little bit of a China UnionPay for digital payments, for mobile and for online payments. Now, there are some wrinkles to that we'll discuss in just a minute, but essentially that will become the centralized clearing point for mobile and digital payments going forward. So if we look at this in the context of the historical development of the online and mobile payment market, Alipay was launched in 2004, WeChat Pay in 2013. The original idea for Wanglian came up in November 2016, and so it was the PBOC approved the creation of this non-bank internet payment union, effectively, again, serving as a China UnionPay for digital payments. The initial platform was launched and agreements were signed by 44 financial firms, including Tencent and Alibaba. The platform was set up and people started testing it, joining it in the beginning of 2017. Now, over the course of 2017, China UnionPay joined hands with commercial banks to launch their mobile QuickPass, which was designed as a competitor to Alipay and WeChat Pay. And then by June of 2018, effectively all of the digital transactions, both online and mobile transactions, will need to go across this new Wanglian platform. Now, the implication for that is, well, first of all, the government's overall idea is to promote the stability and growth of the mobile payments market. So to keep the stable growth and to make sure that we're not having any problems or excessive growth or risk taking within the market. But the other wrinkle to this is the amount of influence that this will adjust within the market. So if you think about the Alipays and WeChat Pays, they had a significant amount of power because they controlled the payment networks that the mobile payment transactions, that 95% of all the mobile payment transactions in China went across. And so they had quite a bit of power with that model. Now with Wanglian coming into place, there's some shifts. So for the payment providers like Alipay and WeChat Pay, it should be easier clearing for them because it'll be a centralized clearing system that they have in fact themselves helped to develop. But it will mean that they will have less bargaining power with banks because there's this common platform that everybody can use. It's no longer limited to just the Alipays and WeChat Pays. And so we should start to see more competition around there. For banks, the big plus on the banking side will be the data. So if you think about the previous transactions that went across the Alipay or WeChat Pay network, the banks would have had very little visibility into what those transactions actually were or what they represented. But in the future, with this Wanglian platform, they should have a little bit more insight into what's going across these platforms. For merchants, most likely the costs will increase. We'll talk about how the costs are changing on the next slide. But there may be benefits for them in terms of integrated payments and better performance analytics. So if there's one platform that's clearing all of these, it'll be much easier for them to deal with multiple different payment channels. So instead of dealing with multiple acquirers, they'll just have one acquirer that's clearing all of the payments and all for across all of the platforms. And for users, it should be a better user experience and better account protection. Now, what this does do from the fee perspective is makes things a little bit more expensive. So if we look at what the fees were historically for transactions for the merchant fees, originally the current individual withdrawal fee would have been 0.1% or 10 basis points. For banks, obviously no withdrawal fee if you're using an on-brand ATM, but the merchant fees will likely change a bit. So the current merchant fees for non-bank transactions are about 0.6% on average across Alipay and WeChat Pay, so 60 basis points. But the average card transaction on the credit card side is between 87 and 127 basis points. And then debit card just a little bit less than that, but significantly more than the existing third-party online payment transaction. So again, this is the fee that a merchant would pay to accept one of these payment methods. For a credit card or debit card, it's about 75 basis points, and for Alipay and WeChat Pay, it would have been about 60 basis points. So those transaction fees for Alipay and WeChat Pay will likely go up and be competitive with the credit cards and debit cards, the current fees for that. Another trend that we're seeing is the launch of new retail. And so when we think about retail commerce in China, there was a couple of years ago, there was this trend of online to offline. So the idea of ordering something online and picking it up offline or having it delivered offline. And that's kind of been supplanted by this idea of new retail. And really, new retail leverages mobile payments, wireless internet, and AI to seamlessly merge offline and online transactions. So if we think about this in the context of an offline shopping experience, you know, the average consumer in Asia and China and Asia is increasing in income. They're very digitized. Mobile penetration is quite high. And so retailers are using digital tools to better serve these customers. So if we think about the average offline experience on the back end, there's better logistics that are enabled by big data. On the front end, users are using mobile payments and digital tools to shop. And in fact, you do have shops that are, I mean, recently we've heard of Amazon launching their shop in the US where you don't have to go through a till to pay at the end of your shopping experience. You just essentially walk out of the door and the bill comes to you. This is also now happening in China. And this is huge, especially in the fresh food market. So if we look at the areas where e-commerce has really had success, one of the last bastions of the offline experience has been fresh food. And it's been very difficult for online providers to bridge that gap because traditionally Chinese consumers especially want to touch and feel the food before they buy it. That is changing very rapidly. Now we're seeing most of the e-commerce platforms have a chaoshi, a supermarket element that allows people to buy fresh food online and have it delivered sometimes even the same day or in a couple of hours or at least within the next couple of days. And Alibaba is experimenting with a new retail a platform called Hema Shengxian. And so basically this is an offline store where consumers can go in and they can order the food to either be delivered or to pick up in the store itself. And so the experience is really unique and very well integrated into the online app. In fact, there's no direct tills at the offline store. You need to use the app when you're buying food or there. And so you can actually go and order the food and have it prepared for you there or have it takeaway or delivered to you. And this model is really catching on. If we compare a couple of the different models here, so we have Equal, that's an online only platform, Pagoda, which is an offline only platform, and Hema, which sits in the middle, which is this new retail. And so this Hema is the platform from Alibaba that we mentioned before. And even within just this 1 year, their revenues have grown dramatically. The average annual revenue per shop has increased dramatically, and the number of shops as well. So we're seeing this kind of idea of new retail in this. It's not quite offline, it's not quite online, but sitting in the middle where people have an experience offline in the store, but use online tools to complete the purchases. And so this is another one of the trends that we expect to see, not just in China, but across Asia in 2018. Now, any discussion wouldn't be complete if we didn't look at Bitcoin and ICOs. So when we look at the market over the course of 2017, obviously the big story was the growth of Bitcoin over 2017 and its market cap in total. Bitcoin's market share has actually shrunk in comparison to the overall market cap of cryptocurrencies in general. And that's largely because a lot of these other cryptocurrencies have grown quite a bit. And are taking a significant part of the market. What we talked about Ripple before is now the third largest cryptocurrency, Ethereum the second. So whilst Bitcoin still is kind of the first mover and still has the largest market cap, there are a number of other players that are getting involved in the space as well. Asia has really taken a liking to Bitcoin, much to the chagrin of Chinese regulators who have cracked down heavily on it. But Japan and Korea, we're seeing Japan be quite open to Bitcoin and cryptocurrencies in general, and many of the exchanges from China have moved there because of regulations. And we're seeing Korea originally trying to take a very hard stance, but then receiving a lot of pushback from individuals around that. Significantly, as well, was the rise of initial coin offerings, or ICOs. The year-on-year growth was 10 times from 2016 to 2017. And while we're expecting the growth to be a little bit less than that in 2018 because of monitoring and regulation, ICOs will continue to grow in 2018 as well. Government regulation has been a big part of the story in the cryptocurrency space over the course of 2017 and likely going forward in 2018 as well. And some of the more notable regulatory crackdowns were in China, where over the course of 2017, they first implemented new KYC requirements for exchanges. They shut down ICOs, they've shut down Bitcoin exchanges, they shut down Bitcoin mining, and they've shut down, or they're trying to crack down on over-the-counter face-to-face transactions, so offline cryptocurrency transactions that would happen face-to-face rather than through an exchange. So you have countries like China that have taken a very hard stance. On the flip side, we mentioned Japan. Japan has issued 11 licenses for cryptocurrency exchanges, as well as Singapore. Singapore itself is positioning itself as a hotbed for ICOs. And so you're seeing many of the Chinese ICOs and other ICOs that were meant to happen in South Korea moving their ICOs to Singapore or other jurisdictions outside of Asia. So in places like Switzerland or Estonia or Eastern Europe, there's a lot of appetite for these ICOs because these jurisdictions see it as an opportunity to get more visibility on their marketplace and tackle this very new and kind of interesting market. So regulation will still be a big part of cryptocurrency as we go into 2018 as well, although not so much left in China because they've pretty much regulated most of the exchange out of business. In the future, when we look at cryptocurrencies, cryptocurrencies will attract more funding, certainly in the future as more people get involved. We'll see ICOs continue to be a method for people to access funding. They will increase in interest. Conservative governments will tighten regulations. ICOs will still be very popular, but project quality will be more important as people get more picky on essentially what they invest in. So that was very quick run through some of the key trends that we've talked about in our Top 10 Trends report. That report will be available to subscribers as well and will contain all of the top 10 trends. Now in the background here, we've been having a number of questions that have come in the background. So I'll hand it back to Thomas and we can go through some of those questions.
Thank you very much, Zenon. Our first question comes from a Joseph. Do you see ICOs becoming more legitimate this year, and will they cannibalize traditional fundraising methods such as IPOs or work in tandem with them?
Yeah, that's a good question. I mean, I think that when we tend to look at ICOs, we see the bad news, but we don't see the good news. In many cases, there are some very interesting companies that are using ICOs as ways of raising funding that is very different from traditional ways. And so for companies that might have struggled to obtain VC funding or even angel funding previously, it's an opportunity to raise capital in a different way. And with all of the money that's flowing through cryptocurrency markets, there's a lot of money that's looking for a place to go. And so I think over the course of 2018, certainly there will be more regulations in place around ICOs. We should probably see more, governments like the US obviously want to close it to anybody but accredited investors. Governments like China, in general, I think the regulators are looking to protect their individual investors. Even though Singapore is opening up the market for these ICOs, they're also protecting their own people by restricting a lot of them from actually investing in the ICOs. And so that will continue to be a trend that we'll see. But I think the legitimacy will continue to grow as we get further down the track into 2018.
Thank you. Our second question comes from Sandia. Do you foresee that banks will close down the physical banking counters and focus more on the fintech instead?
Yeah, so that's a good question. And going back in my time with Citibank and shortly after I left in kind of 2006, 2007, there was a lot of talk about the branch dying away. And, it's challenging for banks because there's a tremendous amount of capital that's involved in expanding a branch network. And for certain places, those branches are very critical. When you get to second or third tier cities here in China or in India, having the branch there is the way that many people are able to interact with their bank or conduct their financial services. So the branch network will still be critical. I think certainly we will see retrenchment in certain areas and retraction of the branch network in certain jurisdictions, especially in more developed markets where there are more online options for conducting one's financial business. We've seen here in China, the private banks, the We Banks and My Banks that were set up as completely digital only banks are not growing as quickly as would it be expected. And that's somewhat down to regulation in terms of where they're allowed to operate and how they're allowed to onboard individuals, but they still face challenges. So that will limit the ability to completely move away from a branch model in the future.
Our next question comes from a Johnny. With the introduction of Wanglian and centralized payments clearing, do you think there is an opportunity for the Chinese retail banks to challenge the status quo and take on Alipay and WeChat Pay?
Yeah, that's a really good question. I mean, I think a lot of the focus of Wanglian was to give the banks a chance to get back involved. Because when you think about not so much the fees, I mean, we calculate, I believe last year, that $30 billion was lost to the digital payment providers over the course of 2017. So those are basically fees that would have traditionally gone across the traditional card network that went across the digital platforms instead. But the fees are only part of the story. The big story is the data. And so these banks, whilst losing the fees hurts, losing the data is really challenging. And so that's really part of the reason that we've seen the government push this Wanglian. Now, how the retail banks take advantage of it remains to be seen. At the end of the day, a bank is a bank and it's not a lifestyle platform. Whereas what we've seen with Alipay and WeChat Pay is WeChat and Alipay have become lifestyle platforms. Many individuals here in China live their lives within those two apps. And so when you have that much of a closed loop environment with everybody using the apps for whether it's booking food or taxis or a shared bike or just making payments or to friends, splitting the bill, there's so many things and so much functionality in those that it's very difficult to overcome that. And the banks will really struggle to do that because they don't have the lifestyle platforms that these third parties do.
Thank you, Zenon. Our fourth question comes from Alinda. Will blockchain finally mature in 2018?
Yes. It's a very broad question, but a very good question. I think we've been waiting for blockchain to mature since Bitcoin was first launched or the idea first came up. I think we need to give it time and we need to be realistic. I mean, this is a very new technology. that we're seeing here. And I think we're starting to see organizations really get a feel for how to use it. I think if you were at Sibos a couple of years ago or any of the big conferences, there was a lot of talk around blockchain for this, blockchain for that. But really, I think in the past year, there's been a little bit of a realization about what it can do and what it can't do. And we're starting to separate the wheat from the chaff. So we're starting to see the business models really float to the top. Now, that being said, we're in this market where there are hundreds of ICOs that are being launched every week that have blockchain-enabled business models. And so I think certainly for the traditional players in the market, so the banks and the IBMs and the other players that are getting behind blockchain and distributed ledger technology, there's a lot of opportunity there. And I think the projects that remain are really the serious projects that have business models behind them. I think in the ICO space, which isn't necessarily just about the financial industry, there's going to be a little bit more of a shakeout, because there's a lot of money floating around for a lot of ideas that probably have no or that may not have a strong use case in the future. So I think there might be a little bit of challenge around that.
Our next question is, how do you see the growth of bank as a service or insurance as a service models driven by APIs growing in APAC?
Yeah, that's the idea of open banking and API banking is quite interesting, especially as Europe comes into PSD2 at the moment. So I think it'll be a period of time before we see API banking really take off in Asia outside of particular locales. So certainly places in Singapore, Australia, where you have a financial industry that's relatively developed and mature, will see development. I don't think we'll see anything pan Asia in terms of banking as a service. So I think certainly domestically within countries across Asia, that will be a trend that we'll see over the course of 2018. I think largely the PSD2 in Europe will be a good experiment or a good case study for Asian countries to look at. But I think the challenge in Asia with any kind of large effort like that is being able to cater to all of the countries. And Asia hasn't had a very large success in terms of pan-Asia projects within the financial industry that have enabled something like this. So individual countries, certainly, regionally, maybe not so much.
Thank you very much, Zenon. Our next question comes from Alinda. Will the ways countries treat ICOs affect how the rest of the fintech sector develops? Will this put China and South Korea at a disadvantage?
Yeah, that's a really good question. It's very easy to conflate ICOs with blockchain in general. And I think, rightly or wrongly, much like when Bitcoin first came out, the Silk Road gave Bitcoin a bad name. ICOs are almost giving blockchain technology a bad name in a certain respect as well. So, I think it might be challenging to separate the two in the future. But I think in general, when I look at South Korea and I look at China in particular, China is very behind blockchain in general, but the ICOs are something that they didn't want to have. So basically, the ICOs presented too much risk for the individual investor, and so that was the main reason why they banned ICOs. Basically, is to protect the individual retail investor. But I think, going forward in the future, blockchain will certainly be part of the story. I don't think China or South Korea are at a disadvantage for that. I think, when you look at corporate development of blockchain solutions, that will continue apace. It may limit some of the startups, but then, there is a lot of money sloshing around in the VC environment here in China that supports these startups. So, if a blockchain startup has a good idea, there is access to capital here as well. So.
Thank you very much, Zenon. And our next question comes from a Jen. How do you see the options for international business to consumer e-commerce payments, especially for all the e-commerce web shops selling or exporting from China? Right now, it's quite complicated to single receive customers' payments and convert to RMB.
Yeah, and that's one of the areas where companies like PayPal have really excelled on that. PayPal, the Chinese cross-border e-commerce corridor, is one of their largest revenue lines, And a lot of that flows through Hong Kong as well into merchant accounts in Hong Kong. And that's still going to remain a challenge. I mean, the key driver for that is the openness of the capital controls. And so until we see those capital controls change, I think we'll still struggle with the e-commerce in the cross-border e-commerce, especially as it relates to China, because that conversion to renminbi, as rightly pointed out by the person who asked the question, is challenging, and it makes the straight-through processing and payments very difficult in that case. Certainly, the government is more open for inbound payments now than outbound. I mean, there's a lot of scrutiny with any money leaving China. So for payments to Chinese vendors, it should be potentially a little bit easier, but still will be challenging going forward.
Thank you very much. Our next question comes from Winthia. Do you expect the banks to have a competitive response to the rise of fintechs focusing on the remitted business?
Yeah, so I think it'll be interesting to see how the banks handle this, because the way that the TransferWises and even Ripple itself are growing, they're really taking advantage of the opportunities in the market. And for a lot of the organizations, there wasn't much choice beyond Swift beforehand, but with now there are viable alternatives to Swift, like Ripple and TransferWise. So I think the banks will struggle with this. When we look at global payments, cross-border payments for banks, it's pretty much the Swift network or regional initiatives like SEPA in Europe, but the Single European Payments area. But in Asia, I think it'll be a little bit challenging because that kind of cross-border cooperation hasn't been happening yet. So it may be down to the TransferWises and the Ripples to establish those networks for the banks and capture that value. But I think certainly the banks have the work cut out for them over the next couple of years in cross-border payments. Consumers, now that they have real-time payments, are getting more demanding domestically. As we start to see more cross-border payment initiatives, there will be more certainly around that as well.
Thank you. Our next question is, how will Wanglian affect competition in the payment space? Will it break down the dominance of the large platforms in the third-party payment provision?
Yeah, so we talked a little bit about Wanglian before in one of the previous questions, but I think the challenge for this is the user experience, because I think people have just gotten so used to using these platforms for their daily activities that it's very difficult to take them away from that. So with the competition, certainly Wanglian opens up the market a little bit more to competition, and it will allow organizations like banks to get more involved in the payment space. But whether they're able to make a significant impact, who knows? When Alipay was first launched and the mobile wallet from Alipay was launched around 2010, 2011, there were already many trials of mobile payments in play from the other players, but none of them had managed to capture significant market share. And it wasn't until the launch of Alipay that we started to see kind of the growth of payments in that space. So they should have better access to the market. Whether they're able to capture a significant amount of market share really remains to be seen.
Thank you, Zenon. Our next question comes from Tyler. China is currently looking to clamp down on online credit, in particular payday lenders. How extensive do you expect any upcoming reforms curbing the online lending industry to be?
Yeah, and so I think this is one of the big challenges in China. I mean, as we showed in the slide before, the consumer finance has grown very rapidly in China, and the Chinese consumer have very quickly gotten used to credit and gotten used to the idea of using credit. And so if we look at peer-to-peer lending, there were a lot of issues around peer-to-peer lending, and then regulations came into place to somewhat address that. And now we're seeing the same kind of crackdown around consumer finance. There were many companies that are in this space. I was at an event last night, a company that launched mid last year that basically just provides services to consumer finance, to companies that want to provide consumer finance. So essentially providing consumer finance to a PetroChina. And the company has grown to 300 people in less than 6 months. And that's a company that's essentially selling picks and shovels for the consumer finance industry. So this is a company that's providing the infrastructure for companies to get on board with consumer finance. And for that kind of growth, in my opinion, there needs to be there's kind of something wrong with the model. And I think we've seen in the US and in other markets, especially in the US in particular, the love of credit and the issues that that's brought. China has so far avoided that issue, that credit trap of individuals paying off credit card after credit card after credit card. But China may suffer from that in the next couple of years. So I think in terms of regulation within the financial industry, I think certainly consumer finance will be one of the key focuses for regulators as we go forward in 2013 or 2018.
Thank you very much, Zenon. Unfortunately, we were unable to answer all of the questions submitted in our webinar today. We have been busy answering many of the questions in the background, and we will be responding to you individually if we didn't get to your question. As Zenon mentioned during the session, today's discussion was based on Capron Asia's upcoming Top 10 report, detailing the trends in Asia-Pacific FinTech, which will be available as part of Capron Asia's subscription service or available as individual reports. If you haven't already registered for this valuable service, we'll also be providing a link to do so in the email you'll receive shortly, thanking you for your attendance today. This email will also contain a link to the recording we have been making of today's presentation. So if there's any information you missed or you want to listen again at your own pace, you can. Once again, Capron Asia appreciates your time today and hopes you found the information informative and helpful. This concludes our webinar today. Thank you for joining us.